Hello class, my name is Sam Dykes, and today I'll be talking to you about Chapter 10 on pages 23 through 31, covering special rules for cost recovery. So what we're going to cover, I know bonus depreciation is not technically part of the pages that I'm supposed to be covering, but I feel as if you can't really talk about the stuff I'm going to mention from what I'm supposed to cover without mentioning bonus depreciation, so we'll take a second on that. Listed property, luxury automobiles, automobiles and bonus depreciation, and then depreciation for alternative minimum tax. So bonus depreciation, what is it? It's additional depreciation allowed in the acquisition year for tangible personal property with recovery period of 20 years or less. Bonus depreciation increased from 50% to 100% with the recent Tax Cuts and Jobs Act that was passed under the Trump administration. And qualified property includes computers, softwares, water utility property, film property, and assets with a depreciation life of 20 years or less. So this can be something that's really useful for a lot of businesses. Depreciation is a great way to reduce taxable net income and increase cash flow for corporations. Listed property is business assets that often used for personal purposes. Depreciation on listed property is limited to the business use portion of the asset. Some examples include cars, planes, boats, recreation vehicles. Tax laws that allow the allowable depreciation on listed property to the portion of the asset used for the business purpose only. So an example of this, assume that in addition to the assets Tenton purchase in 2019 presented in Exhibit 10-8, so the blue box above, is also purchased a new digital camera for $4,000 that its employees use the camera for his photography hobby. Since the camera is listed property, Tenton must assess the business use percentage to properly calculate its deductible depreciation for the camera. Assuming that Tenton determines the business use percentage to be 75%, what is Tenton's depreciation deduction on the camera for the year? So the answer for this would be $600. So you take the original cost of the camera, you calculate the bonus depreciation rate, which is taken by 5 years, and half the conversion, so 20%, and you times that by the 4,000 to get 800. And then the business use percentage of that is the 0.75%, leaving you with $600 remaining. Luxury automobiles, deductions and bonuses depreciation are limited to ordinary vehicles such as a Ford Focus or an F-150 with some exceptions. Luxury vehicles are subject to a limit on the amount of depreciation you can take. So this Range Rover to the right is an example of a luxury vehicle that you can have limitations on with depreciation. Example of this, what is the maximum annual depreciation deduction available for 2019 on a 2020 Honda Civic costing $19,150 and a 2020 Porsche 911 costing $112,000? The answer is $3,830 for the Honda and $10,000 for the Porsche. So there's a specific amount of depreciation that is limited for a luxury vehicle. And with the Honda, the schedule to the right is the depreciation taken for the Honda Civic versus the Porsche 911. Automobiles and bonus depreciation. For a passenger car weighing over 8,000 pounds, bonus depreciation can be taken from a business. This double the first year. It's limited depreciation from $8,000 to $18,000. So again, this can greatly reduce taxable net income. Fun fact: I heard when the Tesla Cybertruck first came out, business owners were actually enthusiastic that it was actually just slightly over 8,000 pounds, so they can actually double depreciate this. Another example though would be, suppose Tenton purchases a $60,000 car, which is used 100% of the time for business purposes. Tenton would like to claim bonus depreciation. What is Tenton's depreciation deduction for the car in 2019? The answer is $18,000. So you take the $60,000 times the 100% for being fully for business purposes, and then the luxury automobile limitation for the first year is $18,000. Depreciation for the alternative minimum tax. In determining their alternative minimum taxable income, individuals may be required to recalculate their depreciation expense. For alternative minimum tax purposes, businesses are not allowed to use 200% declining balance method. If a taxpayer claims bonus depreciation, there is no adjustment for the alternative minimum tax. So in conclusion, bonus depreciation increases with the Tax Cuts and Jobs Act in 2017. I'm actually currently a credit analyst at a bank in Chicago, and having looked at some of these financials from before 2017 to 2018, bonus depreciation has definitely helped a lot of manufacturers in the Chicago area increase their cash flow and reduce their taxable liability. Luxury automobiles are limited with bonus depreciation. If a taxpayer claims bonus depreciation, there is no adjustment for the alternative minimum income tax. And how the government taxes depreciation can greatly impact business spending and free cash flow, as I previously said. Also, one thing to keep in mind is, as with stuff from previous chapters, stuff that governments choose to put depreciation on and the limits can also be greatly impacted by how governments want to influence behaviors. I know I mentioned that before with the syntax in one of my other prior presentations, but that can also be seen with depreciation as well. And these were the sources that I used for the presentation. Thank you, class, and I look forward to seeing some of your presentations as well.